Hi, today is February 6th, a little after 4 o'clock Eastern Time. I want to share a story with you of courage and discipline. I'm very proud of myself actually for what I did. I want to share it with you, although I may be sorry tomorrow. But this is wheat, March wheat, and this is yesterday's candle. So just concentrate on this green candle right here. So yesterday, this is what I was looking at. So these are notes to myself. So I saw this red line is the 50 simple moving average on the daily chart, and price had come down, touched it, and bounced off. So we're moving away. So we bounced off the 50 SMA, so that's bullish. And we also broke through this trend line. See this thin trend line? So we broke out and rose up, and we're coming up and away from it. We broke through it, so that's very bullish. And grains stopped trading at 2:20 in the afternoon East Coast time. So I actually entered this trade. I went long wheat like around 1 o'clock, I think, in the afternoon. So at that time, you see this wick up here on top of that green candle? So at that time, that was green. So this whole candle was green all the way up to the top of that wick at some point, which was about the time that I went long. Well, when you see that, it's like, okay, we're probably going to close over the 8 exponential moving average, which is this orange line coming down here. Now that's critical in the way that I trade. It's critical. The 8 EMA is kind of a trend indicator. If you close over it, that's a strong indication that you're going to be in an uptrend. And if you close under it, you're going to be in a downtrend. Excuse me. So for this to look like it's going to close over, it was a critical factor for me to decide whether to go long. And like I said, around 1 o'clock or so, it looked like it was definitely going to go. So, and I had to go out. So I couldn't be here between like 1 o'clock and 2:20 when the market closed. So if I was going to get in, I'd have to do it then. So that's what I did. So I got in wheat. And then today, or actually, last night at 8 o'clock, which starts today's clock running and for wheat, you could see where this candle opened. It opened here, which is a gap up, right? So it closed here yesterday at 2:20, and then last night at 8 o'clock, starting a new day, it opened up here. So there's a gap between that close and this open. And then from the open, you see this wick? It started going up. It was like, oh, okay, well, this is great. So this is confirmation. We gapped up and we continued up. So this made yesterday's decision to go long a very good decision until it started going down. And price just kept going down and down and down all day today. And I was expecting it to reverse and go back up. But around like 2:15, I only had about 5 minutes. I came back and I expected to see the price up here. And my target's only here. I set my target to just before this 50% Fibonacci retracement. So I thought was going to hit it today, and if not, if I was going to close very close to it. So when I looked at quarter after 2, I was shocked to see this giant red candle all the way down here, and I knew I had about 5 minutes to figure out what to do about it. So what I saw is that we were closing below the 8 EMA, right? This orange line, we're going to close in 5 minutes. It's not going to move very much near the close. So if it's down here, that's where it's going to close. So we're under the EMA. So that's the opposite of yesterday. And so that was bad. Also, it was very close to my stop. My stop was just a few pips, or also a few ticks off. I'm sorry, below where the candle was. So it probably hit it in overnight trading anyway. And this candle, see how the body of this candle is greater than the body of this candle? The the top of the body and the bottom of the body engulf candle from yesterday. So that's called a bearish engulfing candle pattern, which is very bearish. And everything just looked like, okay, I messed up. This really yesterday did not close very far over the 8 EMA at all. It really closed, it's just a tiny little bit over it. It's pretty much on it. So that was not a strong indication to go long. But like I said, I wasn't available at the close yesterday to see that. Um, right? And then this gap up, well, that was very bullish, but then it just went down all day and is down here. So pretty much yesterday's signal is invalidated, and I've got a few reasons to believe that we're going to go down from here. So if I sold it, that's a pretty big loss. I mean, this is what, $50 a point. It was about $200. I'll take a quick look. It was where's it? $275 per contract loss to close out down here. So I really didn't want to take that loss. And again, I only had 5 minutes to make a decision. It's like, you know what? I have bearish decisions. Yesterday's bullish decision really was marginal. This is going down from here. This is just this whole pattern here. These four candles. This is a bear flag. So you come down and you get a bear flag and you continue down. And if these bottoms aren't very convenient to draw a trend line, but you can see this bottom is actually, if I drew a diagonal line, this probably violated that diagonal trend line underneath these three candles also, which would be another indication that the bear flag has been broken out to the downside and it's going to continue down. So the courage and discipline was to sell my long position, take the $275 loss, and then enter, which is bad enough, and then enter a short position on this candle. And I'm sitting right on this trend line. So we could bounce off this trend line, or we could come down to the 50 and bounce off again like we did here. So it's kind of a tough decision, especially while you're taking a loss. But I think it's the right decision. I think there's a reversal of sentiment here, and I think it's going to continue down considerable distance. So to project where it's going to close, I took this measure of this leg, made a copy of it, and dropped that from the highest point of the flag here, which comes down to here, which is also a 78.6% Fibonacci level retracement in the green zone, the green Fibonacci range, which is from the top here all the way down to here. This whole range. This is 78.6%, which is a Fibonacci level. Down from there, which is right where this is called an ABCD projection. This is point A, this is point B, this is point C, this is point D. So it coincides with that 78.6 Fibonacci level, and it also comes very close to the 61.8 Fibonacci level of the yellow range. And the yellow range, see if I can pick that out, is from here. Yeah, it's from this low up to this high. So it's this leg. See this yellow line? It's this. This is the yellow range, and if you extend that down, 61.8% further down than the bottom of that range is here. It's another Fibonacci level. So you get two different Fibonacci levels of two different ranges plus the ABCD all coincide around here. So this looks like a really good target for wheat. So I put my target down here, and if I enter here, coming all the way down here, it's going to be a lot more than the $275 loss that I took. And then the way that I did it was kind of cool. So I didn't have much time, like I said. By the time I had made up my mind, I had 1 minute left. It was 2:19, so I had 1 minute left. So I had to do it fast. So rather than enter a closing, a closing order from my long and then enter a short order, what I did is I took a short order for twice as many contracts as my long order. Like let's say I had one contract long, so I entered a short for quantity 2. So the first of those two closed out my long position, and the second of those two created a new short position. So I sold, twice as many contracts as I was long, which was very efficient. It was one order that killed both, birds. So anyway, then the market closed 1 minute later, and I have to wait until 8 o'clock tonight to see what the market's going to do. And often, whatever it does gets reversed the next day anyway, like today. So overnight, in order to get that gap, the overnight trading, or not the overnight, when the overnight trading started, it had gapped up and it continued up. But eventually, when today opened, at some point it could have been before the open. But anyway, it did the opposite of what it started doing last night. So, and this is such a big candle that I expect tonight at 8 o'clock Eastern Time, it's probably going to start back up till about half the distance, probably the 8 EMA. It'll probably do that by tomorrow morning, 9:30, when the regular futures cash trading hours are. And then it'll probably reverse and start back down. Anyway, that's what I'm hoping for. So I wanted to share that with you. It was I'm a hero to myself for taking that loss when I could have easily said to myself, oh, give it some more time, or maybe this will reverse, or I can make up all kinds of excuses to avoid the pain of that loss. But no, I saw it for what it was. I knew that's what I had to do, and I did it with very little time to consider it, which was probably a help that I had so little time. I didn't have time to come up with excuses. But anyway, so that's what you got to do when you're a trader. So thanks a lot for watching. Catch you next time.